Today we're talking to Lauren Bennett. Lauren is the CEO for Omega Oil and Gas, and they're a recently listed ASX Oil and Gas Junior. Their focus is the Permian age Surat Basin in Queensland. Lauren, welcome.
Thanks, Sarah. It's great to be here.
So just to set the pace, can you describe Omega Oil and Gas to the audience?
So we are, as you mentioned, a junior oil and gas company. We recently listed on the ASX in October of last year. We have a portfolio of assets in the Surat Basin in Queensland, so that's east coast of Australia, obviously. And at the core of our company are our Permian-aged deep gas assets in the two ATPs, 2037 and 2038.
How does Omega Oil and Gas stand out from its competitors at home and overseas?
We've got a great portfolio of assets. So we're going after a basin-centred deep gas play, and we've got what we believe to be prime acreage in the Surat Basin on the flanks of the Taroom Trough. What sets us apart really though is, I'd say first and foremost, our proximity to infrastructure. So we've got existing operational gas infrastructure not too far from the prime locations in our acreage. And we're on the east coast of Australia, where we all know there's been a lot of conversation recently about there being a looming gas shortage and there being a real, very real need for gas.
Omega counts TriStar and the Flannery family as substantial shareholders. Who are these investors and why do you think they've taken an interest in Omega?
Sure, so I might just start with the Flannery family because of course they've been involved with the company from the very beginning. Quentin Flannery is on the board of directors of Omega, and he represents Ulwella's interest, which is of course the Flannery family office. The Flannerys are very well known as being amongst the most successful small cap investors in Australia. And they've taken an interest in resource and energy stocks of late, and there's been a lot of press coverage about their investments in this space through their involvement with Felix Resources and of course Yancoal subsequently. I'd say they've taken an interest in Omega because they see the real potential that we have in our acreage to be transformational on the East Coast gas landscape, and they want a piece of the upside, so to speak. They've got a very great investment philosophy that has been very successful for them over the years, and they see the same potential that we see in our business, and they want to be there from the ground up, building its success. TriStar, a more recent addition to the company and to the board, we're very pleased to have TriStar on as strategic shareholders and to have that oversight at the board level through Andrew Hackwood. At the heart of TriStar, who are also private, but are a very successful oil and gas presence in Queensland, let alone the east coast of Australia. At the heart of TriStar is the Butler family, who are quite well known in the industry as being, great geologists. So, they're geologists by training. They've got great instincts. And these instincts led them to drilling the first commercial CSG well in Queensland, which speaks a lot to their forbearance in pursuing high risk but high reward opportunities. And look, I think their interest in Omega really stems from that, that heart of exploration, if I can describe it like that, and their similarity to the Flannerys in being able to sniff out a good opportunity, so to speak, and be in it to get exposure to the upside.
So I'm going to turn to the east coast of Australia's gas supply.
Sure.
Is there enough gas to go around?
Look, the short answer is no. I think that it's been widely reported that there is a looming gas shortage, if I can borrow somebody else's words, and without being too doom and gloom about it, it's a real and ever-present thing that we as consumers, but also stepping into my shoes as the CEO of Omega, a future producer, we're looking to face in the near term.
Yeah, and what do you see are the key factors behind this looming gas shortage?
It's my personal opinion that there's been a chronic underinvestment in exploration for some time. So if we cast our minds back the past decade, aside from commissioning those large LNG projects in Queensland, what other major investment has there really been in backfilling those resources. To my mind, or at least my knowledge of the industry, is that there really hasn't been a lot of investment at the pure exploration front to really backfill those resources. So I'd say, that's a key factor. And then, of course, you've got the more recent conversations around regulatory reform in gas pricing and all the rest of that. I think government intervention, rightly or wrongly, will play a role in whether or not producers continue to produce.
In your view, investors, be it retail or institutional, are they fully appreciating the threat that they're facing in terms of gas shortages? And do you think the shortfall's been adequately priced in?
That's a great question. In the first instance, I think yes. There is that recognition that there is going to be a shortfall. So I think for the most part, or at least in my experience, the market is well briefed and cognizant of that tension between supply and demand. So I'd certainly say yes to the first part of that question. In terms of whether or not the shortfall has been priced in, it's difficult. The market is a beast unto itself, isn't it? And it's hard to sit here and say that yes, for the most part, I believe it's priced in, or no, I don't think it is. I think what we are seeing in any event is that there is uncertainty. There is uncertainty across the board, and we'll start to see some of that play out and start to crystallise as the government releases some more firm guidelines on what the pricing mechanism is. See that play out for a full quarter, and then what the longest standing government intervention will be through the mandatory code.
And in terms of the commodity itself, is there anything that you feel traders at home don't know about natural gas, or should know about natural gas?
Oh, this brings me back to my high school science days, but did you know that natural gas is odorless? And for safety reasons, when you go out to any gas field, operators will often add a substance called mercaptan, I think it is, and it makes it smell like rotten eggs. So if there's a leak, or you can detect its presence a lot more readily than using a gas detector.
So as for Omega's acreage in South East Queensland, what geological traits made this area desirable for energy exploration and development?
So our acreage, I'll speak to our the two ATPs. So 2037 and 2038 are adjoining leases, and together they span some 250,000 acres, which is precisely what you want when you're going after a basin-centred play, which is exactly what we're looking to do. We're looking to target the Kianga Formation, which, if I go back to some of the analogue data that we used from the BG, or the British Gas pilot wells that were drilled 10 years ago, we know that the Kianga Formation is gas bearing, and we know that, at least from the wells that they drilled, that it flows to surface. So we've got that encouragement. We also know from that program that there is the presence of overpressure, and in this instance, overpressure it can be used as a proxy for gas saturation. So we're expecting, when we kick off these two wells that we're hoping to spud this month, that we will spud this month, we're hoping to detect the presence of overpressure, because, like I said, that's a proxy to gas saturation in our books. And then the only other thing I'd mention is the Kianga Formation, in the sections that we're looking to target, is somewhere between 150 to 300 metres thick, which is great, because where we might suffer from permeability, we've got the thickness of the formation to really overcome that.
So for investors unfamiliar with the industry, what's the significance of Omega's multi-TCF potential?
Again, brings me back to my high school science days, but I thought it might be best to describe this in terms of what it means for a household. So 3 TCF is roughly 3,000 PJs, or 3,000 petajoules. For reference, 1 petajoule is enough to power something like 44,000 homes for a year. That's 1 petajoule. And we're saying that, the prospective size of our resource is 3,000 petajoules. So if we were just to bring it back to those terms, over 100 million homes could be powered for a full year. So it's an enormous amount of electricity if you were to bring it back down to those terms.
That's quite an extraordinary number when we're looking at shortages.
Precisely. And, I think for us, that doesn't even begin to scratch the surface, because we've also got an associated liquids component of 233 million barrels. So if that were to come in as well, that would also change the landscape of production in Queensland.
So what's on the cards this year and heading into the second quarter of the year?
Well, like I said, in the immediate term, we'll be looking to drill these 2 wells. So after we've drilled the 2 wells, it's our intention to then fracture stimulate both of them. So we're always planning for success. We'll drill the 2 wells, fracture stimulate them, and then put them on extended production testing. This is important because what we're always looking to do is build on the success and the results that were garnered from the British gas pilot program 10 years ago. So we're taking the learnings the learnings from that program and always looking to build on them and improve them. So fracture stimulating the wells and putting them on test should give us a better indication of whether or not we're starting to move towards that sweet spot, which is the key for the type of formation that we're looking to de-risk.
What are some of the big risks you're managing across the business at the moment?
On the macro side of things, we have an eye to weather. In that part of the world, weather can be your biggest enemy or your best friend, really. So we're just hoping that it stays dry while we're out there. We don't encounter too much in terms of wet weather or inclement weather while we're out there. And then the only other risk, I suppose, would have to be, we've always got an eye on what's happening in the regulatory space. There's been a lot of change lately, more so than in the past 10 years. So we've always got an eye to that. But like with all things and all companies in our position, we'll just manage that.
Where do you see Omega Oil and Gas in 3 years' time?
In 3 years' time, we're planning for success. So off the back of the results of this 2-well campaign, it's only a modest 2 wells, but that will give us enough encouragement to really tailor any future drilling, any future seismic, any future activity to de-risking that sweet spot. So I'm hoping in 3 years' time we would have progressed in that way. So we would have either drilled more wells, appraisal wells, we would have kicked off a seismic campaign, and we would be having an eye to just moving down that commercialisation pathway.
Ladies and gentlemen, Lauren Bennett, CEO for Omega Oil and Gas. Thank you for your time. It's been a pleasure.
Thanks, Sarah.